What happened in the market this week? I just like what the tone is so different than a week ago. I'm looking at my portfolio. TF, did Trump say something dumb? Did Powell do something ridiculous? Did Jensen Wong say the world is ending? Like I don't know. Like this is a crazy, crazy move this week. I want to pass to you first, Logical. Like, what are you doing this week? What's your perspective? What actually happened?
Yeah, I'll tell you. I think the market is very top heavy, and it feels like there is really no appetite for continuing to hold a lot of these large cap names. I mean, look at Microsoft. It looks like it put in basically a death cross. Full disclosure, I went short on Microsoft. That's been working extremely well. I think there's a lot of names that don't make a lot of sense here, especially if we see some market weakness. You look at NVIDIA, and the report was fine, but I think it stops mattering about what the first order derivative is, like how fast they're growing, but it's almost like the rate of change of their growth at this point. It's the second derivative. And we're at a point where the beats aren't as big as they used to be. I think maybe we talked about it on the last episode where I was saying, like, look, back in 2023, what started this whole thing was they were supposed to come in at a $7 billion guidance, and they came in at an $11 billion guidance. They're doing beats, they're doing raises, but the size of those beats and raises are much, much smaller now. You have a much higher market cap. You have all of these jitters around data center spend. And I've already been saying it, ever since we had that DeepSeek news, we had the Microsoft earnings where they started to quantify the growth in CapEx spend in data centers. And we knew that while 2026 was going to be a higher CapEx spend for Microsoft than 2025, the rate of change is starting to become much slower than prior years. Like 2024 was up 84% in CapEx spend. So the rate of change as these numbers get bigger and bigger, it's just how large numbers work. Sorry, Gu.
When did you say no? When did you say it's still undervalued though? It's like it's 27 times earnings next 12 months, and like I hear you on the rate of acceleration is diminishing. It's getting tighter and tighter, but I think it's more the market is not believing Jensen of the reacceleration on the margin in the
Exactly.
second half.
Well, so that's the thing, right? Like, and that's exactly the point I was going to make next, which is like, we got a quantification of how much CapEx spend is coming in. And while it seems like this is going to be specifically a Microsoft issue, whether they're dealing with fallouts of OpenAI or whatever, but they're canceling leases or whatever's happening, it almost feels like, hey, you just told us something 2 weeks ago, and now all of a sudden we're concerned about you wanting to spend less in CapEx on data centers. And so now everyone's asking, hold up. We were like saying we were good on CapEx spend. Now all of a sudden one person starts pulling out. What happens if the next person pulls out? But at the same time, you're getting Meta coming in and pondering a $200 billion AI investment. It's a really tough place to be in because I don't know. I personally don't want to be involved in a lot of tech stocks right now. I have basically zero tech exposure. I've been telling you guys over in the last few weeks is like I've been getting rid of. I sold Amazon weeks ago, and these are still decent value companies. And I think, sorry, I'll pass it to Sam in a second, but we had to talk about late cycle bull market, and that's kind of what I was talking about. And I'm starting to come over to Sam's side a little bit to think that maybe we actually do have a consolidation year, which would be extremely healthy for the market longer term for this bull
I hope we
market to
do.
continue. Yeah, exactly. So like I was well, the thing is, I was feeling like, hey, these are really late cycle moves, like Palantir, AppLovin, Hims and Hers Health, like Rocket Lab going X, like up 150% this year. Tempest AI, everything's getting bid up. The worst companies are going straight up. That stuff made me feel really like, oh my goodness. But since then, in the last week, what have we gotten? We've gotten extreme reversals in a lot of those names. A lot of the froth just blown out, which is starting to make me feel good. And so people, we're down 3% from the all-time highs, 4%, whatever it is. SPY's basically flat on the year, but a lot of the froth has been removed from the system. So it makes me feel like, okay, take a deep breath. This is good. So it's a step in the right direction for the market. Sam, I'll pass it to you.
Yeah, no, I mean, I think coming into this year, and I've been pretty vocal about it, was that 2023 and 2024 were amazing years, not just for me, but also for the stock market. Back to back 20 handle years on the stock market. That really happens. The last time that happened, I think, was like the 1980s or the 1990s or something like that. It has not happened in a long time. But we came off a bear market in 2022. What was the narrative in 2023? Everyone was saying We're going to make new lower lows. We're going to go back to the bear market. This is a bear market rally and so on. And the economic data was getting better, but it wasn't like good as much as we saw, like 3-4% GDP. And then 2024, there was still that disbelief that we were in a bull market still, and that we would kind of go back a little bit, and the recession fears were still there. 2025, the narrative changed. You had a lot of people become bulls who were no longer who weren't bulls for a while. You had a lot of major investors flip and start to become bullish, Mike Wilson, for example. And really, the economy was actually doing very good, and people were finally convinced that it was, and economists were starting to get bullish. Completely different mindset from the last 2 years. I'm more of a, I don't want to say contrarian investor, but I do keep my eye on these sentiment readings. Overall, come to the year, everyone was bullish, thinking like, oh, dip's going to be bought. The dip got bought middle of January. And here we are today. We haven't revisited those January lows around 5,700 in SPX, but we're getting close. We're about 4% down from the all-time high in SPX or SP 500. And I came into this year being mostly in shares. And you guys know me, I wasn't like balls to the wall, like buying calls left and right, whatever. But I was way more active in my portfolio in 2023, 2024, and I was buying the dip almost every time, especially August 5th. I think all of us were actually buying the dip hard on August 5th. I don't think this is an August 5th scenario. August 5th was the fear of the Japanese yen carry trade unwinding, and it actually was, but no hedge fund blew up. We're fast forwarding to today. People are constantly thinking the bottom is here. I don't know how many times I've heard like the bottom is here so many times. Handed though, SP 500 is like 12 on the RSI on the daily, which is pretty low. The last time this has happened, we've had a rally back to maybe 6% in the preceding 20 days of trading. Even if that happens, man, I'm not going to chase it. I'm in shares. I don't have that much cash left. I'm planning on adding a large percentage to my portfolio in cash soon. And honestly, I'm going to stay in shares for the rest of the year. I don't see the massive upside that I used to see before. And I'm looking around, dude. And when I say looking around, I'm talking about social media. I see people getting murdered, not posting their year-to-date anymore and all that stuff. I see that happening, and kind of tells you who was on the wrong side of the bridge, right? I'm not going to name names or anything, but at the same time, that could have easily been me if I continued positioning like I had been for the last 2 years. Could have easily been me. So I feel sympathy for them, because I did the same thing too many times. This time I learned my mistake. I'm not going to get greedy. We all made a lot of money in the last 2 years. I'm not here to make the same exact amount I made last year. I'm here to not lose my money, basically, or try not to lose as much.
Yeah, so, I mean, I think it was 2 weeks ago. I was on the space crying a little. I was like, this is my biggest position. I'm pissed off. Holy moly. I got fortunate, because I do feel like I might be part in the minority camp. Like, this is somewhat of a buying opportunity for a lot of these names that I'm monitoring, conviction names. I will say to like the listeners out there, like everyone has different time horizons. Mine's 5+ years out, so my ads are for my long, high-term conviction names that I think are going to be expanding their moat or going to be dominating their thematics and this decade. And I'm willing to stomach maybe another 10, another 20, maybe another 40% dip from here. That could be the case. But I have a 9% cash position now. I add 2% every single month. So the last 4 or 5 months, I just haven't been participating in the market because it's just run up. Like, I fully agree. When like Logical was saying like Tempest AI going 150%, we had like upstarts out there. We had a lot of like small cap healthcare companies just catching major bids. Like, they didn't belong in catching a bid, except they had healthcare and drug discovery or AI in their name, and they're just catching major bids as a thematic move. So I think we need this real gut check, but like I am stoked right now. Like, my portfolio went from, I think, up 22% at one point. Now it's up 6%. I am stoked because I do think this is going to be one of those lost years, and that's going to be fine. I don't think it's going to be lost years across the boats. I think all three of us agreed big tech was going to be dead money this year. I think semiconductors were going to be somewhat of dead money this year as well. Middle of that S curve in like their AI growth thematic right now. They're treating the middle of that S curve as an investment year. They're spending a lot on compute so they don't have any compute constraints, so they actually get the max amount of AI workloads through their cloud service providers. Like, that's how they're treating this year, and it's going to come at their margin expense, and it's going to come at margin compression. It's going to be, you're not going to see that revenue reacceleration to match their CapEx spend. So when that imbalance occurs, that's a death nail for a lot of investors in a thesis for a stock, because you're not going to see margin expansion. You're not going to see multiple expansion. You're going to see the complete opposite. And you're seeing that right now across the board names. And I think NVIDIA, I agree, like them forfeiting their 200-day moving average or 40-week SMA, which was at 129, and they did that with volume right from the bell this morning. That was the tell. That was the tell. Risk on is a no bueno. And it's probably going to start reversing courses a bit, and it accelerated throughout the day. Like NVIDIA was the first tell. And that doesn't mean that the sky's falling. Doesn't mean that we're going to, like, I agree, it's not like in August. The VIX is not at a 60. It's at a 20. It's like the market's moving a lot more than what you, like the fear isn't really there, guys. It's crazy to say because the QQQ went down more than 2% today, but it's a controlled pullback in a way because the VIX is tamed a little. Like QQQ is up, pulled back 8% in a matter of weeks. The VIX is at 20. That, in my opinion, is controlled. And I think that's okay. It's structural pullback that's going to help the longevity of this bull market. I don't think we're going to get into the bear market. I don't think we're going to get 20%. I think we'll finally, like for SPY and QQQ, like I think we're finally going to retest that key level for SPY. Like we haven't tested the 200-day moving average since this rally began in October 2023. That's 15 to 16 months of just pure extension. I think we're going to finally pull back to that level, and that level's at 575 or 573, but by the time it gets there, probably 575. But that's 3% away. So that is the major tell on what's going to occur for the next leg in the rally. I'm going to get defensive most likely if tomorrow we don't bounce. And why is that? The 21-week EMA on the weekly chart for Qs and SPY, that was the common characteristic trade on this bull rally fast 15 months. Every single time it touched that, it V-shaped bounce. Not just like, oh, slight bounce, explosive, retest all-time highs, new highs. Every single time for 15 months. We sliced through that today, like easily. There's no resistance. It accelerated actually towards the end of the day. Tomorrow's PCE will dictate as a catalyst, like, is it going to get worse? Will we test a 200-day moving average? Is this a stage 4 breakdown on the charts? That stage 4 breakdown is where you lose money. Like that's where people, a lot of traders, a lot of institutions, they get out of stocks once they forfeit their 200-day moving average and get in stage 4. That's why I'm getting a little defensive, because if tomorrow we have a red day, the VIX at 20, it's elevated, but like I want to get defensive on buying puts because until we bounce above that 21-week EMA level. And I think you kind of need to have that flexibility a little, where we've been saying this is not going to be the same year as 23, 24. This is not going to be that easy. It's going to be a choppy year. I think we're still going to finish green this year. I really do think we're going to finish green. What do you think about that, Sam?
I think we do finish green this year. I don't know. When I say green, I mean like maybe a few percentage points, mostly because I do think that we're in the middle of an AI evolution. I still stand on that. And Logical and I were discussing that the other day. And I still stand that we are in a major bull market. But that doesn't mean a major bull market that has to go up every single day, every single month, every single year. That does not mean that has to happen. A bull market can still sustain. A bull market, by definition, is staying above a 20% drawdown at all times. The last time we had a 20% drawdown was 2022. We haven't revisited. We haven't even had a 10% drawdown since then. I think we are overdue for a correction. And to give it to you, that 200-day moving average is not even a correction. So even if we go back to that 200-day moving average on SP 500, that's still not a correction, which is crazy when you think about it. It's insane. We're past the 100-day moving average on SP 500. That is a huge bounce level, and the volume just keeps picking up. We're on less than a 10 on the RSI. I'm not saying we're going to have a bounce tomorrow, but I think when the bounce does come, a lot of people are going to be covering short. I don't know if it's going to come to an all-time high, but tomorrow sure is a day for that to happen, right? If you actually think about it, the Fed has been basically bearish rates for a long time, meaning that rates are going up. And then now we see PCE come in, rates have picked back up. I think the 10 years down at 4.3%. It had a pivot high at 4.8%, but the narrative hasn't changed that we're going to be higher for longer. So tomorrow is a perfect setup for the Fed's number one indicator for inflation, PCE, to bounce the market. I think we're probably going to
Guys,
have a bounce tomorrow.
before
Go
we
ahead.
get sorry, but before we get too far on this, let's not get too deep in the weeds on what's going to happen on Friday because this episode drops on Saturday and some of this
That's
content
true.
will
That's
be
true.
still. So
Well,
But I mean,
that's the
yeah,
beauty of the edit function. We're gonna edit
yeah.
that part
We're
out.
going to edit that part. We're going to take that part out.
no, no,
So
no. These are good thoughts to have, but here's what I'll say is like two thoughts. One is I think like you guys were mentioning and Sam you were saying, you know, we were going to make new lows on in 2023. Every economist had 100% chance of recession. I think it comes down to expectations. Like when we go into an earnings, it's not so much about if the numbers are good, but if they're better than expected. And then people are like, these numbers are crap. Why is the stock up 30%? It's like because everyone assumed that this company is basically going out of business. So when that's not the case, you get a big bounce. And when you looked at 2024, we came out of 2023, people were still bearish. And so every investment bank was basically out there saying, oh, you know, we're going to have a 8% year in 2024. That was their guess. That was their prediction. There was no bold prediction on the entire, nobody was bold. Nobody said we're going to have another 20% year. So people were offside. So whenever they said, oh, 8%, we actually did 23 or whatever. And I think coming into this year, every person was like, I guess we're just doing another 20%. Everyone's targets are like 7,000, 7,200. And it's like, okay, dude, you just called it wrong for the last 2 years. You think you're just going to call it right the third time? Isn't this the time like, okay, you were bearish in 2024. Wouldn't it be right to be bearish after 2020? Like, so you thought 20% year, now let me be bearish. How about 20% years? Maybe be a little bit more cautious. But instead, everyone is full on bulled up. They have really high targets. So coming into this year, the expectations were too high. I'm not sure. I heard this on a podcast. I was listening. I think it was Compound and Friends. They were talking about like, you know, earnings growth is at like 15% right now. That's insane. That's already beating expectations. But what has the reactions been? Horrible. Everyone was already positioned to the long side. How much more long can everybody get this market?
Well, I think it's macro driven. That's why it's not like really people long. I really do think people are. The bark might not just be a bark; it might be a bite. The Trump high stakes poker game, and I think it's going to extend longer than expected. I think that's why the tariffs is going to potentially lead to inflation. Then who knows what happens after inflation? Like, I think that's what's worrisome right now. Like, the earnings don't matter; it's all about the macro.
Well, I mean, like, here's what I'll say. I don't actually think that tariffs are going to be inflationary. You'd need additional liquidity to enter the system. You need people to have higher wages. I don't want to get too deep into the macro because none of us are macroeconomists, but look, you had hot CPI, hot PPI, and a couple weeks ago, and TLT was up. That's not what's supposed to happen. People were looking past inflation. They're worried about the downside risks to the economy. They know that Trump wants to reduce fiscal deficit spending. That means each dollar he reduces, that's another dollar outside of the GDP. So the technical definition of a recession is 2 quarters of contracting growth, negative Q over Q growth. And so if we reduce fiscal deficit spending, that can directly impact a slowing economy, which would give the Fed the ability to lower rates. So that's his whole thing. He's like, he wants to lower rates. And Scott Bessent, a really smart guy, he's Secretary of Treasury, he told Trump, look, dude, you don't have to put pressure on Jay Powell. You don't have to put pressure on the Fed. It has nothing to do with the short end. The entire economy works off the long end of the bond. So the 10-year, that's what we've been looking at. And that works as a brain of its own. The bond market is pricing in risks to the economy. So if the bond market if the 10-year is falling, that means that they actually don't think that there's going to be a really heating up economy. It's no longer going to be a flight to safety. I think that, yeah, I mean, it just seems like rates are going to come down. And so I would look to the downside risks of this. And I think basically for the last year, if you guys remember, early 2024, we had a reflation narrative. People were so scared about it. It was like January, February, March, April, and everyone was so scared about that. And then just after that, the pendulum swung the other way. And into summer, we basically had a growth scare. And so we're getting to the exact same parts. The last couple of months, people were worried about reflation, but we just printed hot CPI, hot PPI, and bonds rallied. It doesn't make sense. So I think, yeah, what I'd be concerned about on the macro side is a slowing economy, which is deliberate and by design to get rates down. That all said, I do personally believe that a lot of this selling, inflation, growth scare, there's a lot of macro reasons to sell something, but ultimately, I think that U.S. assets are overowned. They are trading at valuations that you can't underwrite a good investment return moving forward. I truly believe that. I mean,
Just for big, I think it's specific. I think that's very specific about which areas in the market. That's the mentality.
no, I think the S&P 500 is very expensive. I think that historically speaking, it is expensive.
We're at
It's more
23
expensive
PE
than the
right now.
2021 market. Just FYI,
We're at 23 PE right now.
it's a
The
higher
S&P
PE than 2021.
It's a higher PE for Magnificent Seven. That is the measuring indicator for 2021. The market was broadening out, and it certainly isn't, but it's broadening out to the aspect of ex-US. We've been seeing that for a while. We saw China rally, we saw Europe rally, and that's been massively underperforming. I think certain things are working if you position correctly, especially defensive. A lot of people, they look at tech. Tech is, the Qs are leading the downtrend, right? But you know what's not leading the downtrend? The Dow. The Dow's not leading the downtrend. In fact, healthcare and defensives are actually doing very well this quarter, and they're outperforming tech and consumer discretionary, which is Amazon and Tesla, right? I mean, come on. I think everything is outperforming Tesla right now. That thing is just getting hammered. But the way that I look at that, the way that I look at this is the 10 years dropping. The Fed doesn't want the yield curve to get inverted again. So what are they going to do? They're going to cut. They're definitely going to cut because that would mean that the short-term rates are going to drop lower than the 10-year. If it inverts again, that's going to be bad news for the Fed. They're not going to know what to do. They're going to act ahead of it. And I agree with you. Scott Besant's a very smart dude. Scott Besant used to work for Stanley Druckenmiller, right? So he used to work in the whole George Soros, Stanley Druckenmiller office in the early 1990s. The guy runs a hedge fund, or he used to run a hedge fund. He left that, became the Treasury Secretary. The guy knows what he's doing. His goal is to work on the short end, and also he has the threes, right? The three threes. He wants to get inflation. He wants to get GDP to 3%. He wants to sell 3 million barrels of oil, and he wants to bring the debt GDP ratio down to 3%. So that's like 3% down from where we are today. The only way he can actually do that is to help reduce government spending. And you can reduce government spending and decrease rates, which creates a much better liquidity environment, but the Fed needs to act. I mean, this episode is going to come out after Core PC, so we'll have a better idea of that afterwards. But, you know, the thing is that I think that long-term wise, everything's going to be fine. We are in a rate cut cycle. But short-term wise, it's time to normalize a little bit, not drop. I don't think we're going to be in a bear market. I don't think we're going to be in recession. I just think we're normalizing. Dude, we've been like having fireworks for the last 3 years.
I think this is also really important. Let's get more micro, guys. So I think it's really important because like a lot of people, especially in January, like if Tesla gets in the 270s, I'm gonna go hard in that. If Bitcoin gets to 80,000, I'm gonna go hard. If Rocket Lab gets in the teens again, Palantir at $80, like the list goes on. When the pullback occurs, guys, people don't buy. They are fear driven. Narrative follows price action. This is why for me, like when Rocket Lab, let's talk about Rocket Lab because they had a report this afternoon. They're down 20% today, full day, including during the actual session and after hours, on what I believe is just a kick down the road on their medium-sized, the Neutron rocket. So I mean, let me rephrase that. So I think Neutron was supposed to go, which is their medium-sized launching satellite launch. It was supposed to get launched middle of 2025. It got pushed to the second half of 2025. Essentially, sometime between April to June. Now it's getting pushed to June to December. That's going to cause a pullback in the market, in the stock, when it's literally such a minor delay in a space economy that's literally just getting started. It's just beginning. And you can clearly see Electron is scaling up significantly. They're now getting into the high volume satellite manufacturing side of the space economy with flatelites. They are fully becoming that full-on space prime in flatelites. They're becoming the full-on space prime that you want to see in the space economy. Like they're the most vertically integrated space business out there you can buy. But people are freaking out over maybe a 3 month delay on their Neutron. Like I think that's like overreaction. But I built you guys know, like an overweight position in around $4. I actually might add to my position for the first time in over a year at $15. Like I might be looking into it because the thesis has expanded. I mean, is not just validated. Their moat has expanded since the last time I bought over a year ago. So that's why I could care less about the average cost basis. After this dip is probably going to go down to 3% of my portfolio. I kind of want to go up more. I'm not really doing the same thing for IonQ because I think IonQ is going through a little bit of a mess right now. IonQ is a 1% position in my growth portfolio versus Rocket Lab, which was 5%. That just shows how comfortable I feel with each of those thematics.
Well, when you started, it was 1%. That's how good your
both were
average
1%.
was.
That's
Yeah.
what I'm saying. But I trimmed much aggressively in IonQ because quantum computing it's space economy is much more further along than quantum computing, in my opinion. And I just think like Peter Beck, the CEO, he's not Steve Jobs of space, but he's as close as it gets right now. Like you can say Elon Musk is, but he's stretched so thin. Peter Beck is the GOAT. He is just building a monster company, founder led. So I think when you have a fat cash position, when you're up a lot the past 2 years, I think it's okay to add on these dips, even though Rock Lab will go under $10 again. And guess what? When it does, I'll buy more. But I know, like Sam, you're building a DCA position on Rock Lab.
Yeah.
Are you going to be more aggressive on it now that you know?
I haven't been aggressive at all with buying Rocket Lab. I would say I attribute it to one of my buddies that this was my FOMO position because I bought 20 shares at like the worst possible time for Rocket Lab near the top. And I mean, it's not like a huge thing for me, but like it sucks. Like I don't want to see that much red in my portfolio, you know, for a FOMO position. But this was something I want to keep an eye on. I agree with you. I mean, 1% penetration of the entire space launching market. If it's 1% penetration, can you imagine? Sock Talk said this earlier. Can you imagine what SpaceX is at? Holy Jesus, right?
Yeah.
It is the beginning of that secular trend. You can already see it. Like I don't want to say it's a new frontier because it's not necessarily a new frontier. But when you're thinking about not having to worry about building infrastructure underground with all the wiring, building towers and whatever, you're talking about just easy launch a satellite into outer space, bring out phones that can communicate with the satellites at a much faster bit rate than underground and building all the infrastructure. That infrastructure that they have to build underground and what they did back in the, I don't know if you guys know it, back when the dot-com bubble was happening, they were building large infrastructure and wiring under the ocean.
Yeah, the structural arteries of the internet was under the ocean, guys.
They got a little ahead of themselves because we don't use most of that today. So when you think about the infrastructure in terms of just launching a satellite, it's getting cheaper every single year. It's not as expensive as it was like 5 or 10 years ago. It's way cheaper to launch a satellite now. And you probably know this. I mean, you dig into the numbers for Rocket Lab. Once you commoditize this entire industry, the margins actually go up because you're able to scale out more. Because companies are more they can afford to send out more hardware into outer space than they did before. Even though the cost for a launch reduces, the cost of Rocket Lab do reduce as well, and the revenue increases, so that therefore expands the gross margins. I think we are in a secular trend with that, but I think people were expecting it a little too soon, and therefore that's the reason why I wasn't continuing to add to Rocket Lab as it was dropping. I'm waiting. I'm going to be patient. I think Rocket Lab might come back under $10. I mean, you said the fact that like instead of mid 2025, now they're in second half 2025 for the expectation, but it's not a big deal in terms of the longevity of the company. However, when you really think about it, people came in with very high expectations and they don't get it, they're going to pull back. This goes on what Logical was saying when it comes to that.
I will say people bought into Rocket Lab when it got re-rated already by the market. That was the issue.
That was my issue.
I know you only bought 20 shares, but that's great. But a lot of people bought heavy.
Yeah,
and now they're holding the bag because of the gurus out there like who bought Rocket Lab. Like, if they're buying it out there, like the big ones, they follow suit. But I think there's an inflection period that a lot of people are missing out on Rocket Lab. Where, like last quarter alone, they made $133 million in sales. They're up. Like the reason they're selling off is because Neutron's getting delayed a couple months. Neutron for every it's $50 million for every Neutron launch. I just said the last quarter the company made $133 million total. That's the game changer. Neutron's a game changer for Rocket Lab, and when you see them getting pushed back a couple months, this came right after Bleecker Street wrote a short report saying that Neutron might get pushed into 2027. I think this just poured fuel into the fire, and I think that's why it's causing FUD like a move when their moat has expanded drastically from what it was a year or two ago. I can't imagine what they're going to be like in 2 years. I am putting faith in Peter back. But like, I want this to be a 5% position for me. But again, even though the VIX is at 20, the market looks like it's deteriorating. It's okay to slowly DCA into these high conviction names, just slowly, because nobody knows the bottom is going to be. Cloudflare, I bought 5 shares of Cloudflare. 5. That's it. Just because I want, like, I don't know if it's going to give me that sub $100 price again, but I want to boost my portfolio position. So I bought 5 shares just so I can say, I took advantage of that 25% dip in Cloudflare. But I know, Logical, you have a completely different style than I do on like participating in these kind of markets when it's clearly looking more downturn, and I'm clearly just adding slowly, but
Different time
fully
frames.
knowing, different time frame, but fully knowing like I'll probably have to add more because it's going to go lower and lower. But I want to hear your perspective on all that
Well,
stuff.
I will say, like, generally speaking, I have a lot of my portfolio still long, obviously. Like, I've added some short exposure, and I have 40% of my portfolio in TLT now. And I'll take down some of that equity exposure if I feel that we have continued weakness, or I'll just short more to offset the amount of equity I have right now, because I do feel that we're kind of in a weird spot where things are weak. But funny enough, I did own Rocket Lab at $4, and I traded it to 11 only to miss the run to 33 or whatever. But that's life. And
You
actually,
might get another chance to get in at 11 though.
You might be able to get in.
I actually do think so, and my buy price would be probably $10 to get back into it.
Is it because of the psych level, or is there a specific like technical?
I think that everything above $10 was momentum chasing. That's what I personally believe, and I think that a lot of traders that bought on momentum will end up selling at a loss, and that's just what's going to happen. This thing's going to round trip. I mean, dude, even if it went back to $10, it would have still been over 100% gain in less than a year. I mean, people forget that.
Do you factor a lot in anchored average VWAPs? Like, do you like that metric? Because that's my favorite metric.
It's funny. It's coming up more often, and I should be using it. I do not use it, but I should use it, honestly.
Sam, what about you?
I mean, I don't know. I should be using technical levels more when it comes to that stuff. But when it comes to like long-term buys, I kind of use valuation and historical valuation more in that perspective. But it's very hard to use Rocket Lab for that.
That's why I'm saying you have to kind of use technical to Rocket Lab because they're so
it's very
early.
hard to, yeah.
So the anchored average VWAP, essentially, it's like it dictates the average behavior that someone in a specific time frame bought that stock at a certain price and volume. Like, it's a perfect barometer on the psychology of an investor entering a stock at a certain price. Like, it's the best out there. The anchored average VWAP from Rocket Lab's IPO price. Again, IPO. All the investors ever participated in Rocket Lab, it's at $11.42. So in my head, I'm like, it would be tough, to be honest. Like, it breaks $10, especially because that's psych level. Like, everyone and their mother's just saying, oh, I would love to get Rocket Lab under $10. Once it happens, they're going to pop in. But a lot of people who've been on the Rocket Lab journey for the past like couple years, they're going to use that anchored average VWAP from the IPO price, and they're going to feel comfortable adding at $11.40 because that's dictating the behavior of it.
Well, I said $10. I think that makes sense. $11.40 might be to the penny where I exited Rocket Lab. I'm not kidding. So there you go. And I didn't do that.
You knew where the AVP was going to be for.
It's funny, Shai. Actually, I did buy a space company recently. I have a space company.
SpaceX.
AST Space Mobile?
Yeah, I do. I'm in. No, I have AST Space Mobile.
Nice.
If the numbers are legit and it seems like they have good backing from like Verizon, etc. I mean,
their partnerships are incredible.
I mean, they're going to do $1 billion in cash flow in like the next year or two, which would mean that a $6-7 billion market cap would be.
I traded that
very
recently.
cheap.
We're all going to be boomers, like grandpas. Well, like, all our grandparents probably love American Tower. Our American Tower in our generation, when we're like 6 years old, we're like, yeah, we own AST Space Mobile. It's the American Tower of space.
Yeah.
They're going to be like, oh, Grandpa, you're so boring. What do you mean AST Space Mobile? Like, we got in really young.
My grandkids better not call
young
me
buck.
boring.
Then they're buying
My
like
grandkids better not call me
alien.
boring, man.
They're probably buying like alien robotaxi stocks or something.
Yeah. I don't care.
So, wait, hold on.
What's a stock? The stock market? There's a place where you guys can like buy and trade capital.
Dude, they're
what?
on tokenized Web3 stuff at that point. Real quick, what was the most, I don't know, standout earnings for you guys this week? Because there has been a lot of earnings. Should I start us off?
Ooh, that's a loaded question, young
There's
buck.
so much today.
Let me see the earnings calendar.
Wait, before you continue, just want to give a shout out to our sponsor because everyone's really eager to hear this, and so am I. So just want to give a shout out to our sponsor, guys. If you're into crypto and look for ways to add it to your IRA or stock brokerage, check out our partners at Osprey Funds. They offer easy access to crypto through traditional investment accounts, and there's no need for wallets or exchanges. The Solana Trust, ticker symbol OSOL, and Binance Coin Trust, OBNB, let you get exposure to these assets right from your brokerage or even your IRA. This is just a heads up, guys, to explore your options and make sure you do your own research. You can start by checking out their website at ospreyfunds.io. That's OSPREY funds.io. Check out the prospectus. Okay, go ahead, Shai.
I gotta say, it might be AXON Technologies. I was gonna say maybe Snowflake, but I think AXON just
Wait,
like
isn't it AXON Enterprises?
I think it's technology.
Oh man, if
Either
I know it,
Axon
I know it
Mobile.
more than you. It's your own stock, man. So much for your
Enterprise.
romance.
Jeez, I am. First off, those second words, it's a waste of. I don't know. It's a
Axon
waste of space.
Technology.
It's called Axon.
Palantir Technology. You're thinking of Palantir, that's why.
No wonder I was talking to people. They're like pausing, like what? Okay, so that makes sense. Regardless,
Tell us.
Axon Technology. Enterprises. Axon Enterprises. If you guys were, I think, did we talk about this last week or 2 weeks ago?
No,
We were
we
talking
did
about
not.
no. They just reported earnings. We were
Yeah.
talking about how it was down. There was competitive pressures. And
Oh,
we
the
could circle back
the
to
flock safety breakup. So there's a lot of FUD associated with this print because
Yes.
I think it pulled back 30%, and a lot of people were like, "Oh man, is there?" Because Axon has a monopoly in the public safety space, like an absolute monopoly. Nobody else has the ecosystem that they have in public safety. And then this cute little I call them a vendor to demonetize them a little, but it's just like this feature within their ecosystem, flock safety, started becoming a potential competitive threat. So in order to control the ecosystem, Axon's like, no. You don't do this to us. We're cutting you off. But the street viewed that as, oh, there's new competition when there's only one Axon. And there's only ever going to be one Axon. This, like, it's very similar to the monopoly that Apple has for consumers. It's very similar to the monopoly that honestly NVIDIA has in the digital economy. Like, it is a monster of a company that's always overvalued. However, quarterly reported right now, 34% year-over-year growth. They beat on the revenue easily, but their EPS is supposed to be coming at $1.51, came in at $2.08. That's a massive margin expansion that occurred and caused the stock to go up 18%. So
They faded.
I think it faded with everyone else.
But it's great.
It's great because I added one share today. One share. But it's tricky because like they're trading at 78 times their free cash flow this year. Like it's a pricey stock, but it's one of those companies that will just have honestly a Rule of 40 score of 50 for the rest of the decade. And I think there's a drone component that nobody talks about for Axon. There's a retail industry that nobody talks about for Axon that might be a massive TAM expansion.
Also international expansion.
I was going to say, you see that international expansion, the sequential growth alone, and they're getting into enterprises now. Unfortunately, like what happened like in New York with a certain company, like there might be more C-suite that are going to want like actual protection and security. That might be the new norm. Axon's going to benefit off that. So like when I say that Axon Enterprises, their TAM is mankind, like I'm not BSing. Like it really could be. It could be the ecosystem that controls the whole world's public safety. There's no reason it doesn't have to be. So in this future automated world we're about to enter, we're going to have policemen that are drones, maybe. We're going to have policemen that are robots. Everything's going to be physical AI. What do you have to do to protect public safety? You're going to have to partner with Axon. And where do you have to store the evidence? Into Axon's ecosystem. And it's going to be a massive runway. And if you guys know Rick, like Rick is the Steve Jobs, essentially, of public safety. Like he is known as that within like the people close to him. Like he is the GOAT. So in my opinion, to answer your question, logical, long-winded, saying Axon, and it's just that margin expansion opportunity. And the commentary on the call on the international and enterprise side, it was like, whoa, type of thing. And it pulled back 8% today. And you were able, it's a 50% retracement. I know a lot of people love when the gap's up a lot and it retraces 50%. That's when you buy hard. It literally occurred today. So I'm waiting till tomorrow. I might add more, but I know Sam, you like that name too. So I want to hear your thoughts.
Honestly, I've been following this for God, I've been following it over a year now, probably a couple years, but like really like looking at this company for a year now. And I don't know if you look at a chart, but if you look at the chart basically prior to just a few weeks ago, it's just up, 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 right? And it's just, I don't know why I never bought this company, but handed though, what really attracted me to this company is their margin expansion in their cloud business. So you have the actual products, the physical products, right? You have the taser, you have the tasers, the guns, everything, but they're locking people into the ecosystem by selling them a subscription to the cloud recordings, right? And there's a lot more than that with AI, whatever. But when it comes to this company, they're literally building a fortress around their products, especially the fact that they have the leading products in the entire world. But not only that, they're fortifying that entire position with software that's proprietary to their products. So
Wait. Are you talking NVIDIA or are you talking Axon?
Axon. I know it sounds similar.
Right?
I see what you did there. I see what you did there, man. Nice one. I appreciate that. No, NVIDIA's doing it with CUDA. Axon's doing it with their software enterprise, right? So 60, well, actually, I have the numbers up over here. So they came in last quarter. They actually beat the gross margin estimate from 61.7. They beat it at 63.2%. And honestly, their next quarter, they're still going to be growing at 24.8%. But the way that I see this is that this isn't really a company that I want to look at as a trade. This is a company that I'm probably going to keep DCing into.
It's a beach stock. It's a beach stock. It's a fallen beach stock.
I'm just going to keep on just DCing into it, and then I'll take myself in a while, right? I'll take myself maybe in 4 or 5 years once everything starts progressing again. But if I'm anticipating, and if I am correctly anticipating that we're going to get a lot of, I don't think it's going to be smooth Higgins for the next few years. I think we're in a quote unquote fourth turning. I think there's going to be a lot of friction going on in the entire planet. And I think we're just seeing the start of it, or we started seeing the start of it a couple of years back. I think non-lethal weapons is going to become a very important factor, especially since eyes are on the media, right? So well, what happened what happened back like in 4 or 5 years ago with the choking of citizen in the street? And then what happened like in the last couple of decades where it comes to officers shooting someone to death that they were just trying to restrain? This is going to become very important, especially like you said in the corporate sector. Honestly, it's very hard pressed for me to think of a long-term bear case unless it comes to like a serious competitor. But Axon is literally the taser company that's reformed into modern day technology with the addition of high margin cloud business.
And you're also not even talking about the AI component of it. There's draft one. You guys, a lot of people don't know, like a third of the time for a policeman is filling out reports. A third. Their AI draft one, which is their AI component, solves that. That's a massive add value. Massive. Workforce is reduced. They need more policemen out there. They need more monitoring. They don't have the budget for it. This is how they get that budget. It's a win-win situation. So it's just like valuation is really high, guys. I totally get that. They have a rule 40 score of, I'm looking at it right now, 42, being priced at 75 times free cash flow. That's ridiculous.
The free cash
it's got a premium for a reason. Exactly. And it's got a premium though, because this has a mega cap this sounds like a mega cap all over it, especially when the TAM's expanding. And right now they're trading at 40 billion times. That's what I'm saying. This and Cloudflare, they're both scream mega cap to me eventually. And like, I'm going to stomach this overpaying this current valuation, but like, we're entering an era of new age of defense. And the new age is Palantir and Axon. Palantir has a retail following. They both have mission-oriented CEOs. Absolutely. If you don't know Rick, the CEO and founder of Axon, listen to a couple of his videos. Look into him. He is just like Karp, but he doesn't care about that retail army though. He could care less. I've seen the videos of him talking about it. He does not care about having a following like that. They're not good at IR. They could care less. They're all about the business. If they had a retail army, I really do think this would trade at a similar multiple as like the Palantir, and that's going to be an $800 stock. I think
it
just like when we're
stock.
It was. That's a crazy thing. But like, I do think like when we're 6 years old, like when we talk about like the boomers now talk about Lockheed Martin, they talk about all these missile device companies like,
This
oh,
will be
this
one
is
of
the
them.
defense. Axon and Palantir are going to be the new age of defense in like 30, 40 years. People will reference them as like the DoD budget spending for defense. Where's that going towards? That's the new age of defense. That's why I'm saying like when the Pentagon's cutting a budget, it's not just cutting the dollars, it's evolving the budget. And that evolution is not going towards these old school missile defense companies. They're going towards the Axons and Palantirs. And you're going to start seeing that more and more in the coming years. That was a great question. I want to ask you the same question, Logical. What's your most impressive prints so far this week?
Yeah, there was two notable ones. I'll cover them both really quickly. I don't have as deep of a dive as you on Axon, so I'm happy to hear that from you.
Well, apparently I don't either because I don't even know the name. I feel like a one night stand of like, oh, I don't even know your name. I woke up next morning.
Palantir.
Yeah, the first one is it's a commercial biotech. We talked about it last time. Arcutis Biotherapeutics. We talked about this last time. ARQT.
I own it in my small cap portfolio.
You have it. Oh, wonderful.
Yeah.
I mean, what position is it? What size is it for you?
Like 4.
Okay, that's great.
Fundamentals just don't back it up, but yeah.
So they had a 55% quarter-over-quarter increase in revenue. They are, I'm going to read this, the most prescribed branded non-steroidal topical treatment across 3 major inflammatory skin conditions. They keep getting more supplemental new drug applications through the FDA to be able to expand their indications. So they're just constantly increasing their TAM. So like now they're able to treat ages 2 to 5 or whatever. So they're getting that natural growth in their business. And they paid back they did a partial prepayment of $100 million on their $200 million of debt. So that's a really good sign that they think that they're going to get profitable really soon. And actually in Q4, they only used 0.7 million in operating activity. So that was their loss. So they're almost already cash flow break even and they're growing at that speed. And then also people are like concerned, hey, is this going to be like a one and done sort of thing? But they're actually, they have a pipeline of other drugs potentially. They're still very early stage, like in alopecia and whatnot. But it seemed like they were saying on the call that there are signs of efficacy. And so I think that helps expand the timeline of what this stock can do. But yeah, I mean, just their product alone already they have a partnership recently with OBJ, which is interesting. Yeah. So and they have, clearly they're getting a lot of insurance coverage, which is great. So I think it'll become like probably the most used, cream, whatever, for these skin conditions. So it's an interesting one, and I don't think it's very expensive at all. They have 200 million cash on the balance sheet. They just did 160 million in revenue, and that's before things in 2024. And I mean, that's really before things pick up. So they did 69 million in revenue in Q4. Yeah, full year was 166. So I mean, that's before, like, earlier quarters really didn't have a lot of revenue. So that's going to really pick up. And this is only trading at 1.5 billion with 200 mil cash on the balance sheet. So I think it's going to be really cheap in hindsight.
Well, to add more color to what you're saying, like, I do want people to know, like, the 3 largest payer coverage networks cover. I think it's called Zoriv. Zoriv is so that's huge. I think the next tailwind is like that Medicare Part D program that they're kind of in negotiations with. Like, if that comes to light,
yep,
huge. And another one is I think it's the FDA decision in their Zoriv foam in the scalp and like the body psoriasis is supposed to happen sometime in May of 2025. So that's going to be a massive TAM expansion opportunity as well. So like, I do think this is a really interesting angle in the dermatology space. It's not like one of those like stupid biotechs that burn cash or on a long shot drug. Like
stage, right?
Exactly.
We're not in
That's why
stage.
I love those kind of companies, especially when they make revenue and you're seeing their guide path to profitability becoming a reality.
Like,
and they still have a couple FDA decisions that might be massive tailwinds for them.
Like yes, at some point, being a specialist in biotech, you would like need to understand, is this product going to be successful, whatever. But aren't we just at that point studying a business and studying a stock and studying a business with a product? I mean, that's what we're doing, right? Like, we do that in every other industry. So when you have a commercial stage biotech, it's just like studying any other business or any other industry.
I think it's also important for everyone to know, like, dermatologists are like shifting away from using steroids that they've been using for decades. Like, they're clearly is long-term safety concerns when you use steroids. And that's why like their Zoriv product is like a great niche to disrupt that. And it's well positioned to kind of capture that migration. So it is like, what is it? Is it $2 billion market cap now? I don't even know what it is. I think it's like a little under 2 billion.
It's 1.5 billion and they have 200 mil cash on the balance sheet, dude. It's pretty damn cheap.
No, I think profitability is within 2 years. That's why once it got that within 2 year mark, I was like, oh, interesting. Because I feels like there's a couple tailwinds that can accelerate that run up. And if that occurs with their top line growth, it's unfortunately probably going to be an acquisition target. That's just the way the business works. But maybe it isn't. And maybe it just holds out and becomes a shock wave for a mid cap that's like 25 billion. If that's the case, it's a 10x opportunity.
Yeah, honestly, I should probably size this up. It's a 6% position.
Did that just convince you?
Yeah, a little bit. I mean, I just because it actually like things are selling off right now. That is something I can get behind.
That's
a
what I'm
real
saying.
Valuation support. It's a real growing company. 6%, maybe that's too light, honestly, on a position like this. Maybe it should be 7 or 8. Maybe. I'll think about it. Okay, wait. Real quick, wanted to jump into the next one, and I'm not going to say too much on this one. Sorry. Real quick.
No, go.
Magnite.
Yeah.
Because I told you guys what was said on the call, but I think the stock was down like, I don't know, a few percent, but I mean, what wasn't today? So it wasn't immune from the sell-off. Overall, was actually reacting well. I thought it was a pretty underwhelming report, but that's because, so they have DV revenue, which is like, think about it like your legacy revenue when it comes to ad tech. And they said that that's already, so basically that came in lighter than expected. So the overall revenue was kind of like a miss based on their expectations, but CTV revenue came in ahead of their guide, which is honestly the only thing that matters. So I really like to see that the CTV revenue was good, which is why I'm long this stock to begin with. I mean, they just announced that they have the live sports partnership with DirecTV. The Netflix partnership is really still just ramping up this year. We don't really know what the situation is going to be with X or Twitter. They got that. There was like the announce on that recently, but they actually didn't announce it. They talked about how it was like a third-party reporter who did. Super weird situation. So let's see some details around that first. But clearly there's a lot of opportunity for this company. They're still pretty cheap. I thought the growth was a little underwhelming, but I think that as we start seeing the CTV opportunity open up, it's going to be really cheap. But the main part I wanted to highlight was, dude, he was going at Jeff Green. It was insane, dude. So I don't know if you guys have heard anything on this, but he spent the 5 minutes early on in the call just like basically saying, let me push back on the trade desk's claims that OpenPath is going to disrupt SSPs. And he just goes bullet by bullet and just goes at him. And you know what? I kind of get his point because, to be honest, they've been using that narrative for years and I haven't really seen it come to fruition. And it makes sense for some of the publishers to go with the trade desk maybe if they have the resources in-house to be able to do their own yield management. Like at the end of the day, the trade desk is going to represent the buyer. And so when I think like you need to have someone that's unbiased that's going to represent the seller, and that's where I think an SSP does fit in. So it makes sense from that regard, and you get to outsource like all of your yield management, like, hey, make sure I get the best possible bid for my ad space. And so he was pushing back, and honestly, we all know how the trade desk quarter went. I didn't listen to the call. You said it was kind of like some corporate BS hand wavy stuff, and to be able to try to like throw it off and say, well, OpenPath is going to bring us so much more business, that to me, I'm happy that Michael Barrett, CEO of Magnite, pushed back on that.
It sounds like a very similar to Sentinel. I mentioned this, like Sentinel-1 to CrowdStrike. We saw how that turned out. Sentinel-1 lower than the outage levels, and CrowdStrike's above it. So like,
Fair.
I hear you on
Very
that.
interesting
I do think
earnings.
I do think Jeff Green is warrior mode. I'm hoping that because I think he's ticked off a bit on his soldiers messing up because he's clearly some VP messed up and the massive reorganization in December. He's getting more senior people under his belt. Some hotshot or a couple people effed up. But yeah, Sam, I want you to pass it to you.
No, Magnite is something that Logical has always talked about. And I want to get in. I don't feel like I need to rush with it, but I need to do more research on it. Because I like the gross margins. I'm looking at their chart. I'm looking at their metrics right now, and their gross margins have been expanding quarter over quarter. They came in actually pretty good, 65% gross profit margins. So I want to look into that. I want to see how are they that high? Operating income. I don't know. We might have something here, man. We might have something here. I have a lot of candidates coming into this market right now, but yeah, I think that about wraps it up. Great conversation, guys. You want to close it out, Shai, with earnings next week?
Yeah, let's close it out. And also, there's a chance that we're going to start a GoFundMe page if we have another week like this in the markets next week. So I just want to flag
well,
that.
might have to.
Comment on some like really interesting names we can have for our GoFundMe next week. Next week, we got Okta Monday. We got AST Space Mobile after the bell on Monday. We got GitLab after the bell on Monday. We got, that's really it on
SMR.
Monday. Then we got
SMR.
some Target pre-market on Tuesday. There's more?
Tomorrow and Monday.
SMRs on Monday. Okay, that's interesting. We got CrowdStrike after the bell on Tuesday, so that's gonna be a big one. We got EOS Energy after the bell on Tuesday. That's interesting. That's America's battery company. Nothing else on Tuesday. On Wednesday, we got a couple retailers. We got Abercrombie. We got Foot Locker reporting pre-markets. Then we got Marvell reporting Wednesday after the bell.
Actually, I think they reported
MongoDB,
ahead of time, to be
Zscaler.
honest.
They did?
Yeah, I think but go ahead.
I don't know. Maybe the preliminary, but we got Marvell, MongoDB, Zscaler, Viva. Wednesday afternoon is an interesting one. That's going to be a fun one. MongoDB, saw what happened to Snowflake. We did not touch on Snowflake's earning. That is a disappointment. But consumption model has been strong this cycle, excluding Datadog. Confluence done
Shai,
well.
I'm sorry, but I gave you the mic and I asked you what was your standout earnings, and you chose
Not say
Axon.
Snowflake.
Man.
Axon, I will say.
I
Because
did give you
Snowflake's
Axon.
doing just fine. That's why.
Yeah, I don't have to worry about Snowflake.
There you go.
That's my baby. Let's see what else. I mean, that's really it on Wednesday after the bell. Thursday, we got some JD.com pre-markets. Black Sky Thursday pre-markets. Then we got Broadcom Thursday after the
That's a
bell.
big
we got
one.
Costco after the bell. Big Bear AI, Palantir's cute little cousin that's trying to ride that
Wait, did you
wave
say Costco is Thursday?
after the bell.
Okay, we're gonna find out how sad I am
I
because I'm short
know.
Costco in size. So we'll
Dude,
find
this
out.
might be the quarter. They never do bad in a quarter. This might be the quarter.
We also got Samsara after the bell
Samsara.
on Thursday. And that's an interesting
IoT.
IoT company. So Internet of Things. I don't know how much, because I know Palantir does a lot of that similar stuff. Yeah, that's really it. I mean, when I say that's really it, there's a couple bangers next week. It's
That's
not
a
over,
lot.
guys.
Yeah, it's
It's
lot.
not over.
And we're
So-
deep at this point. Like, so
We're-
that's crazy.
Honestly, next week might be the last real week of
It
the
is,
earnings cycle.
yeah.
So
No, there's more software the week after that, but for the most part,
Probably
they're
like
more
a
smaller
Braze
cap-
or something. Yeah.
I do have a GitLab trade, guys. I have some comments. I think source code management is going to be a near-term tailwind in the agentic AI world. Let's see. It's their first earnings with a new CEO. Typically, those never have firework type earnings. It just never do for the first one, new CEO. But Sam, I'm going to pass to you to close us out.
Yeah, thanks for tuning in, guys. Appreciate it. If you're, we also have a YouTube channel. Go ahead and check that out in the comments. We also have a Spotify channel as well. Go ahead and check that out. And shout out again to our sponsor, OspreyFunds.io. Go ahead and check them out. Check the prospectus, not financial advice. And appreciate you guys coming through. Peace.
Peace.